Good morning, everyone. Welcome to the London session. This is Thursday, so is it Thursday? It is Thursday. Just double checking. So this will be this week's last London session because I don't like streaming on Fridays. Fridays for me should be capital preservation and all of that good stuff. Let me just check that everything is working well. Can everybody hear me? Can everybody see me? Just double checking because obviously we had Jerome here yesterday, so I did move a few things around. Okay, it looks like we're all good. If you're here for the first time, my name is Deeyana Angelo, better known as Market Stalker Dee. I am somebody who specializes in some of the more unusual products that are not always well represented across the board. You will see me trade a lot of copper, platinum, gasoline futures, which we call RBOB, is basically RB, that's the symbol. But we kind of joke that RBOB is our Robert. That's mine and Hoag's joke. So yeah, I used to trade crude oil for 13 years, but crude oil has dried up quite a bit. It's an entirely different market, and this is something that we have to contend with as traders. Market states will change, and we cannot always expect that markets will always be liquid or that they will always behave in a similar way. Another thing to point out is that I'm Series 3 qualified. However, this is all for educational purposes only. So unless your plan also states to go into any trades that you might see here, please do not follow. Bruno, our lovely moderator, has put up a risk disclosure. So make sure you read through that. I don't have the fancy graphics that says, hey, you, yes, you. And then they point out not to follow any trades, not to fade any trades, and effectively not to be a lemming. Now, in that vein, I would maybe like to give some attention to, figuring out stop loss sizes and what you should be actually using as a more systematic way to figure out whether there is volatility and whether maybe your stop sizes that you've been using up until now warrant a review, right? So that should be a part of your plan. And when I was watching at the Buzzer last night, which is kindly run by Coach Jay and Coach Paul, they kind of touched upon a few things that, obviously are very, very important. And that, last week we had high volatility. This week the equity seems to have dried up a little bit. So how do we approach that? Like, how can you even do anything when the markets are changing constantly? I like to turn to data. I think by now most people know that I'm a pretty systematic trader. I am reasonably comfortable in my setups after 18 years of doing this. And if you don't really know much about me, for the first 5 years of my career, I was an independent Forex swing trader. I wasn't in futures, I wasn't in intraday trading, and it really wasn't until 2013 that I actually thought to myself, hey, I actually want to make this into a real career, so why don't I switch markets, go into futures, learn a whole bunch about that, and see if I can maybe switch to intraday. Little did I know that even with my 5 years of experience as a swing trader, and I was reasonably successful, I had a 6-figure account of my own, and I just wanted to scale that up, which is why I went into prop. And obviously there were a lot of ups and downs along the way, but finally I did manage to, after 2 years get consistency in what I was doing. But it took me literally 2 years, even with all of the experience. So this is not a get-rich-quick scheme. This is not something that you can start now and then in 3 months you will be a millionaire. It is a skill that I would liken to any other high-level skill, like performing surgery, becoming a doctor, becoming a highly skilled musician, becoming an Olympic-level athlete. And that is that is something that can adjust your expectations and then just go, hey, I'm gonna take this as a marathon, not a race. And therefore, I'm going to make combines last, and I'm going to use them as learning tools. Now, why is it important to spend time in a combine, which is something that we all bang on about? Now, yes, you can get funded in 2 days. Yes, it's a great opportunity if you're already an advanced trader. But what we see people doing over and over is full porting it in combines, getting to a funded status, and then finding out that whatever that they're doing doesn't have any longevity past the 2 days. So if you can't really, if you can't really make a combine last longer, how do you think your funded account is going to go? And another point is that when you're sizing up, you need to have enough buffer in that account in order for that to absorb any potential drawdowns. And I know that we all have, rose-colored glasses with trader math and stuff, and then you have 2 good days, and then you extrapolate how much that will be for an entire year, not taking any drawdowns into consideration. But the way I create my risk models is worst case scenario, not best case. Best case is like, oh, awesome, I'm smashing it, it's great. But if you go down to the time when you're underperforming, everything sucks, you suck, you can't seem to make any headway, which is what I'm seeing in the VIP, in our VIP groups, people are struggling. So, is it still the right thing to size up? Is it still the right thing to try and get funded in 2 days? No, it isn't. Quite the opposite. Professional traders, when they get themselves into drawdown, they differ from the retail traders because they size down and they get more selective, not less selective over the setups. They pore over the data and they go, what did I go wrong? Where did I go wrong? Did I have the direction right, or did I get it completely wrong? And one of those review moments should give some attention to your stop loss sizes. Now, Coach Paul has a very good way of doing it. I think he uses a 5-minute chart, and then he advises using 2 times ATR for your trades. Now, I have another way of doing it. I actually like to use a DR and something that I coined as a SR, which is effectively regular trading hours averages. And then I like to divide that by a certain number in order to get my stop loss sizes as a default. That way, I have a systematic way to figure out whether my stops are conducive to the current market volatility and market environment. I also look at things like volatility indexes, VIX, traditionally on, equities, but there's VIX for everything almost. There's VIX for platinum, there's VIX for crude oil, there's VIX for gold, there's VIX for a whole bunch of stuff. And if you go back in time to see when you were doing well, this is again where some of the combines that you saved may be exported to another journaling software where you can save them, save all of that data to pour over it. That could be something to include in your plans. It's like, what was the volatility index doing? What number was it at when I was absolutely smashing it? Okay, let's say you had a really good month, amazing month, right? Nearly every day is green. You're just like the wizard, Yoda of trading. What was VIX doing? And is it different than now? And if yes, what does that tell you? Well, if the VIX is not the same and you're finding yourself, having a lot of Muppet moments for whatever reason, maybe the answer is that the VIX environment is just not the same anymore. And in this VIX environment, your strategy needs a tweak, sometimes a complete refit as well, but usually some sort of a tweak to your approach should be. All right, so we have some questions here. Street Runner says, I just got funded yesterday evening, currently up 2,500 my first trade. Okay, here we go. So new funded account, and Street Runners is trading with so much size that you're able to generate 2,500 in your first trade. How long do you think that's going to last if today doesn't go that well? There are no boundaries how much you can make in an XFA, but there are boundaries how much you can make in a combine, and that will be in the rules. So please, before you go into a combine, you're already funded, right? So there's no limit there. But is it a good thing to trade with size? And when I say trade with size, in a high VIX environment, that's like one NQ. I don't trade NQ much. I trade it very rarely. If I am going to trade equities, I'm going to trade ES out of the CME ones. But I do trade DAX. We don't have DAX yet on Topstep. At some point we will. However, I wouldn't, in my craziest dreams, go in with like 1 mini on a new funded account. Unless it's like a 6-figure account that I got because of a track record from, somewhere else, another prop firm. They can just basically plow in 6 figures right away into a brand new account. And yet, what we see all the time, first day, up 3K. The next day, minus 3K. Day 3, another minus 3K. And then the account is poof, evaporates. All of that effort, all of that work that you poured into this one account to make it and to go, like, it's a time investment as well, right? You're wasting so much time. So isn't it better to just start off slow and then see, proof of concept is a real thing. How long can you trade without disasters? And at what point does that disaster start happening? At what point? Is it after 2 days? Is it after 5 days? Is it after a day? So we need to aim for consistency. We need to aim for longevity. We need to, be a bit more sensible about how you're approaching your combines and funded accounts and what you're using them for. Now, don't get me wrong. We have people who have been trading for a long time. We have short life hacks here, quite a lot. We have quite a few people who come from sort of the market maker environment. But if you've ever seen Short Life Hacks comments in the London chat, he did point out something very interesting to me, because I'm not really a scalper in the default sense. I'm a mean reversion trader. Yes, sometimes I will do a breakout trade. Yes, I will sometimes scalp if the day calls for it, but I would never call myself a scalper, and that is not my primary style. But if you are aiming to be a scalper, even though I think that beginner traders should be nowhere near scalping, that's another discussion maybe. I would say that most people who scalp, it's literally just a fear, or it's not really any sort of an edge. It's a fear of holding trades longer because they are not sure about their quality of the setups. They're not sure whether their setup can even go for more than a few points. And to me, that's a recipe for disaster, because you're going to get over trading. You're going to get so many things going wrong. And Short Life Hacks pointed out that if you want to be a scalper, you really need, and this was his words, at the very minimum 10,000 trades as a sample size to see whether you even have an edge. So let that digest for a second. Even if you're making 40 trades a day, which for a scalper shouldn't be a problem, you would need a full year's worth of trading without blowing up, without doing anything, to see whether you have an edge. So if you survive for a year and you have 10,000 scalps, then you'll know whether you are profitable or not. All of this nonsense of, I traded well for 1 week. Okay, how have you traded for the last 3 months? I blew up about 10 combines. What does that tell you? That's information. It means you're doing something wrong, whether it's oversizing. And anytime you change anything, it is a parameter change. If you take a look at every single thing that you change in your trading, whether it's sizing, whether it's stop loss, whether it's the target, whether it's the time of day that you trade, all of it is a single parameter. And the more you're inconsistent with that, the more random your results will be, and the less P&L stability you will experience. So you're going to have huge variability in your P&Ls. You're going to go up, you're going to go down, you're going to blow up, then it's going to be great, and then it's not going to be so great. Why do we do that to ourselves? Let's just start with like from the beginning, right? 1 micro, 3 trades per day. Try to trade like that. Put the trade limit on. Luckily on Topstep we do now have things like maximum trades per day. Do 1 micro. Put it for 3 trades per day. And then go into 1 month of sample size. Can you survive 1 month? Trading 1 micro mentally? Because some people are like, that's boring. That's boring. Well, to quote the coder on Twitter the other day, well, do you want to have fun or do you want to make money? Like, why are you here? Because we all start because we are, attracted to either the environment or the possibility of not having a boss or, whatever. But ultimately we do stay because it allows us to have more resources in life. And somebody who's much wiser than me one time said, trading is the hardest easy money that you will ever make. It's very true, right? Ralphie says, not Ralphie. Dee needs reading glasses. Ralphie? I don't know. Sorry if I butchered your name. Do you still use MetaTrader tools? Yes. So we are actually in the process of creating or replicating our tools for NinjaTrader because everybody seems to have moved away. Now, when we coded our lovely Bloodtick indicators, we were we're a UK company, and back then, which was 2015, so it was a long time ago, we knew that MetaTrader was one of the most popular platforms that the retail traders were doing. So yes, I still use it as my main charting software. I still have my AMP accounts, and it's still my primary charting package, right? So I have a few of these. All of them are from Bloodtick, which is a company that I'm a partner of. And we create these lovely tools for retail traders. Now, obviously, recently people have moved more into futures because of all the shenanigans that we had in the Forex world, in CFD world that is only like partially regulated, even though they say they're regulated, but those are non-standard contracts and stuff. Now, I use MetaTrader 5 from AMP Futures because that is real futures contracts, and they actually use CQG as their data provider. Arguably, some of the more stable data comes from CQG. They have been around for donkey's years, as we like to say over here. And it's still my main charting package. But obviously, because I'm on TopstepTV, we try to stay with Topstep. At some point I will probably be restarting my own live streams on my own account. And there I will still be using Topstep and Ninja as my execution platforms, but I will stick to the charting, still using my Bloodtick tools. So yes, very much so. I still use it, but again, we were asked to make sure that we focus on the platform from Topstep. So hopefully that makes sense to you. What is a combine, Dee? Combine is an agricultural... No, just joking. Okay, so if you're new here, FX Trader, it looks like you are. Combine is an evaluation account coined by Topstep. It is basically a term taken from the sports world where when they're doing trials and stuff for the proper games, they do a combine, which is an evaluation of the player's skill. So we call it a combine. Some other people call it evaluations or challenges or whatever you want to call it. But it is basically an assessment of a player's skill under pressure and under certain rules and targets that need to be achieved in order to get into the big leagues. So hopefully that makes sense. But, I'm not going to spend time explaining what a combine is. You have an entire Topstep authority website that you can go to, topstep.com. Read through it, okay? That would be a very good use of your time. Christine says, if we pass the evaluation and then trading in real money after a withdrawal, can I still use the same account when I need to open a new combine? This again goes back to reading the rules. So if you have more than 30 days of over $200, over $200 in profit, so 30 days of over 200, not consecutive, so you can trade for 3 months, and then over those 3 months you happen to have some red days but mostly green days, and then you get to 30 days. At that point you can withdraw 100% of the funded account. However, before you get to that stage, unfortunately you can only get 50% of the money. Why? Because the prop firm wants you to stay with them. If you withdraw the whole money, then they're like, well, you're not live funded anymore. So therefore, they only reserve that for the traders who have managed to prove competence and consistency over a certain amount of time and generated over 30 days of profits, right? Over 200. It's one of the requirements. Again, go to the website, read the rules. Let's have a look at what is going on. And again, Street Runners keeps going. I made 8,500 total in 2 days to pass the combine. That is not a good thing. So good luck to you, man. But I wouldn't be surprised if you're here next week going, the account is blown. So longevity over size. Anyways, copper. So I have a copper chart here. And yes, we are indeed below the value area from London yesterday. Where is the value area? Up here. What is it? It's a distribution curve. It does seem that there are lots of people in here that might be a little bit newer. Value area is the same as a distribution curve, but it is a concept by Jim Dalton and Peter Steidemeyer, however you say it. It's basically looking at where the business was happening yesterday. So 70% of that, so wherever the price spent most time, we call the value area. Now that is only one part of what I do. I also use some of my concepts like the exhaustion areas, exhaustion points. I've seen some people in Discord who are wondering why their ADR exhaustion levels are not working on TradingView properly. It is because those exhaustion areas are not the right ones, and every single indicator that I saw on TradingView calculates it wrong. They take the open at midnight, and then they put half of it up, half of it down, and they think that that's the exhaustion. It isn't. Okay. ADR and ASR, the RTH, or average session range, because it's not just the regular trading hours. You can also have Tokyo, you can have London. That's why I called it the average session range. That is a dynamic measure, and it literally calculates new days highs, new days lows, and it adds or subtracts until the average daily range is exhausted. Now that's a little bit more difficult to code than going, here's the open, plop half up, half down, and then we're good. That's not the ADR. That is the fixed daily range. Completely different measure, usually used in range-bound markets, not in markets that are, not the markets that are moving in a normal way. So if they're range-bound, then we can talk about the fixed DR, which would be most indicators out there. But ours is my concept that I've noticed over the years that I used to calculate myself in Excel spreadsheet and then track it throughout the day to see which side is exhausted. And then when I had the resources, I hired a small development team, and they ended up becoming my partners. So again, this was all very, very long time ago. So we're all still in business and still creating innovative tools and trying to basically bring something professional when it comes to tools to the retail world. And we're going to continue doing that with us trying to translate everything into other platforms to the best of the platform's ability, because some platforms don't have enough tools and they're not proper object-oriented languages. So that's another topic and something to nerd out over, maybe if I have Coach Robert on again. Okay, so can I have your insight with NQ? No, you cannot. I think NQ gets enough time through 8-9 hours of the main broadcast and millions of YouTubers that trade it. So no, I will not talk about NQ. That is not my main market. And if you want NQ analysis, please take a look at the main broadcast when effectively you have everybody obsessed with that bloody product as if it's the only thing that exists in the world. I don't care for it. I think it's an insane product. I think while it does move a lot, it also causes a lot of grief. I always say NQ giveth and NQ taketh, because NQ doing zoomies and causing heart palpitations and a whole lot of grief and psychological trauma for newer traders, I'm not really in favor of that. There are very few people that can grasp it and consistently and sustainably trade that product. So no, we will not be talking about NQ over here. We're going to be talking about copper though. So we are under some areas here. We saw a pretty decent reversal off the highs after making a pretty interesting spike right at Globex, which I think is somebody blowing up from the institutions, because it didn't look, and also where that happened, you know, we had just a previous high here. I reckon they had some long-term short position in copper and then they got liquidated. And it's not going to be your mate Dave and Harry down the road. It's going to be one of the big institutions that had quite a lot of size to it. Give me a second. My one of my dogs, my older doggy, Leonard, the King Charles Cavalier, who is over 12 and a bit deaf. He's trying to, well, not a bit deaf, he's actually deaf as a post at this point and works on hand signals. He's trying to get into my office. He was a bit sleepy earlier. So just give me literally like 5 seconds so I can get him in here, and then he will be happy and we can carry on with the stream, okay? I also do see Jerome D in the chat, so I've just seen him. And if you were here yesterday, we did an awesome neuroscience class where we talked about PIM, we talked about focus, we talked about dividing your attention between multiple tasks and how our brain slows down. So it was a very, very good class. If you missed it, please go back to the yesterday stream. It is still on Topstep channel. And very good to see Jerome here. But yeah, so somebody got liquidated. What are the big boys? Let's go down to the daily chart, see what we have. That whole day yesterday that started off with that stop loss pop. The institutional stop pop. That's difficult to say. Say that 10 times fast, right? And now we have this huge spike down. Oh, what does he want now? No, he wants out. Let me just wave. Enough. Come on. All right. What do I expect today? If we have a look at the value areas from today. So let's just have a look at 4-hour chart just to do our due diligence. We have a newly formed area of selling, right? How did the price leave that area? I mean, it's left it, right? But we have another test into it that weakens this whole structure. That's more important for longer term outlook, which I do use in my trading as well. But for today, let's go down to a 30-minute chart and start looking at some intraday levels. The first point of contact is where we're opening in relation to the value area. We have value area low, so the edge of the value area low, 526.85. We're opening below it with a little bit of a gap, but we're close enough to the value. I like to use percentages. We opened up sort of between sort of 0.34% away from value. That means that they could go up and test it. We also have some areas of interest up there. So not only do we have the edge of value, we also have the average session range exhaustion point and GEX3 from the options activity. But here's the thing with copper. It's very directional, okay? It doesn't do this thing very often where it goes up to a point of contact and then reverses, and then intraday we go back the other way. Once it decides where it's going to go, it generally maintains that directional bias for the rest of the day. And sure, some days like yesterday, we can have the London session that looks like it's going to go higher and then reverses. Yes, that can definitely happen, but it's not the norm. And when you're in an active session, once you see it kind of decide on where it's going to go, that means you should probably look at pullbacks and then just going with that same direction. Now, I was on for the end of fast markets for about an hour. I was doing a little short there that would have ended working out very nicely because I had it from, and that was on my live account as well. There's only a small position just to, you know, have something to trade. And let me see. Yeah, so I got involved, I think, somewhere around here. And on a 15-minute chart, I just did not like the fact that we were diminishing in volume. It was just not really that great for me, what I want to see when I'm doing a breakout type trade. And sure enough, I killed it for like, I think it was like $11 or something. But then it did indeed go higher, only to reverse and to carry on. So my original stop would have survived it, but because I only had like an hour to do something on the main broadcast, I kind of decided to manage it a little bit better and not to allow it to go into drawdown and then add and whatever. And it's yeah, it's, you know, one of those things where we cannot pick and choose when the moves are going to happen, but we have to manage it. And, you know, obviously with the on-air stuff, people want to see you trade and people want to see you click that button and whatever. But the market doesn't care about that. The market is like, yeah, whatever, mate. So, you know, the setups won't always come when we want them to come. And I was actually watching it breaking out as I was in the green room. And then I think we had a recap and then it all kind of carried on. And I was just watching it and going, my trade location is going. My trade location is going. My trade location is going. But hey, that's the nature of live streaming. What do you think of the ultra treasuries for day trading? Now, I will be honest, I find, so here's the thing. I need a product that I trade, and I spoke about this just the other day. I needed to have a certain amount of tickage, certain amount of ticks available in a day. If I go to trade something that only has like 40 to 80 ticks available, even if it's moving, it just completely does my head in. So for me personally, I don't like the ultra bonds. There are some people who love them, absolutely love them, but unfortunately I'm not one of those people. I tried many times, you know, every time people say, oh, you're gonna love bonds, and then I look at them and I go, like, how can people trade that? But you know, different strokes, different folks. I can see that the bonds are much smoother. So from that point of view, when I say I like smooth products, I can see why people think that bonds would be something that I would enjoy. But at the same time, I do not enjoy it when, you know, I moved away from Forex because it went down to like 40 ticks a day. And I just cannot stand products that take an age to traverse 30 ticks. It really does my head in. So I need like a medium. This is something that I learned about myself after 18 years of doing this, that I need that sort of medium ground of not too high volatility, not too low volatility. And that basically falls under things that move between 180 to 300 ticks per day. And then I'm like golden, right? Because that means I can run enough trades that will allow me to make enough per trade that I deem acceptable in ticks, which is typically anywhere from 55 ticks up to about 160, sometimes even 200 if I see a swing opportunity. And I'm somebody who's very known in the industry of holding trades for hours, but I'm not holding them for hours to get 30 bloody ticks. I'm holding them for hours to get 200, 250, 280, like a huge chunk of the day that I can then go, okay, I did that on small size, but the upside was massive. So, you know, if you trade with one lot on copper mini, let's do some calculations, which is $12.50. And then you grab 220 ticks out of it, you're looking at nearly a $3,000 day, right? On one mini. So that's the thing that I get off on, right? Small size, but you get so many ticks on a single trade because you're so good at mean reversions. Those the people who are like, I call them grasshoppers, in and out, in and out, in and out, in and out. It's like you've had a trending move for like 200 ticks and you've just racked up commissions like there's no tomorrow and like they're going out of fashion, and you think people should be impressed. It's like all of the commissions that you've just done are eating into your tiny little profits. So while you were grasshoppering in and out of the trade, I sit in one and I make 220 ticks. And it's like, how many ticks did you grab? Oh, I grabbed 50 ticks. And I'm like, okay, over how many trades? Oh, I did 40 trades. It's like, slow clap. Great. So I don't know. I have some different outlooks. And, you know, maybe at this point I'm more looking at things from a risk management point of view. And whenever I see people doing 40, 50 trades a day, I'm just like, oh my God, your broker is going to love you, man. You're going to be best friends. So yeah. Why do I trade copper and not gold? So gold is a fickle beast, right? So let me have a look at what's going on with gold. So why don't I trade gold? Let's see what happens with gold at this time of day. And I am going to drag over my my other thing for speed and accuracy so that I don't have to bring up like a ton of levels and then you have to wait for me to do them. So let's just do this quickly. Just reset all of that. If my computer ever decides... See, when I'm streaming, something happens to my CPU. I need to seriously have a look at it. I had a look at it like for a bit, but... Alright, so here is what gold likes to do during London. This is a 30-minute chart. I mean, wow, who wouldn't want to trade this lovely barcoding indecision mode on GC. So furthermore, GC is in rollover. So yeah, weird week. This time of day, Asia actually trades gold quite a lot more. But then London, for the first like sort of 3 hours, has this like really awkward pause where it just does nothing, and we go back to the opportunities being to within 30 ticks. And if I look at, okay, today it's a little bit slower on copper, but usually by the time that gold is moved like 50 ticks in this time frame, copper already has about 70 or 80, sometimes even 100. So copper just seems to be more tradable for this time of day. Now, something that I'm looking at in copper today is a break to the downside. I have this HVL here. What is HVL? That is taken from the options chain. It stands for high volume level. And it's effectively a point where the gamma exposure is sort of is basically breaking between negative and positive, right? So if you get an environment that I would argue today we're a bit slower, but if we smash and hold below HVL, that would accelerate whatever is happening right now. So I have a little bit of a bearish stance. I don't like coming into the bias with my setups. So I will typically have a story for both sides of the picture. But whenever we have sort of a bearish sentiment due to the open, And due to, some of these options levels being here, we have, these calls are still here. We're still under them. Last time we tried to touch it at the open, it was violently rejected, right? But as it stands right now, we're kind of at VWAP from Globex. VWAP is very flat. We have this HVL, so it's sort of like decision mode. And we could very easily go up to these levels, so to that edge of the value area, and just continue to smash into new all-time highs. That could happen. We have plenty of space to a DR high, which is the full 24-hour exhaustion point at 530.95, so very close to that 531 evens area. But if we go lower, I would actually be more inclined to jump on that, because I think we're like yesterday we had some puts and we fell right below them. And anytime you see people with put strikes and then we can't get up there, it acts as a resistance on a back test. So, that is kind of my hypothesis here. That is my hypo 1. I have hypo 2 in case we hold HVL and we hold these lows here and we're unable to create candles that are no wicks, so without buying wicks. As soon as I see buying wicks, to me that indicates some sort of passive buying. And if I want to be short, that is not a good thing. So for now, it's just observation mode, right? Like I always say, what I look for is understanding. I don't look for, oh my God, it's moving, I have to get in, which is how people trade NQ. What I want to see is that I fully grasp what the intention of the market makers is. And I do that with a combination of profile, exhaustion points, and options levels, right? Time of day as well. So before I plow in, I want to see an initial balance extended. We still haven't done that, okay? We're still inside the initial balance, which is in this area here. So I'm going to delineate this with a border. Does this show up? It does show up. Okay, so let's delineate the initial balance with a nice sort of red line. Now I'm going to increase this to the other side just to make sure we see the wicks and the candles and stuff. But basically it's these two candles. So the big bear. And then another little sort of a harami, I suppose you could call it, but it's not because it's still in the wick. But yeah, small consolidation area, and for now they're very, very undecided. We haven't gone outside of the initial balance yet, and that means pause off the mouse and we wait, right? Stay patient. There's a lot of waiting in this game. You need to learn to wait. Sunita says, what is the best book or course to learn about futures and currencies? That's a loaded question. I mean, when I first started, I didn't turn to books. It's kind of like learning how to swim. If you read a book about swimming, it's not going to teach you how to swim. And you go, right, now I'm going to go and jump into the river. It's not going to happen. It's a performance discipline, okay? You're not going to learn how to ride a bike by reading a book. You're not going to learn how to swim by reading a book. And likewise, you're not going to learn how to trade properly by reading a book. But if you're just looking for like a general knowledge sort of thing, there are plenty of books out there, It depends how deep down the rabbit hole you want to go. But if you're focusing just on trading stuff, I would probably look at just learning about candlestick patterns, learning about basic technical analysis, before you dive into more complicated concepts, like maybe get Dalton's books. Jim Dalton has a new book now, but his first 3 books were amazing, right? That is what put me on the path of profile. And it is a bit wordy and a bit scary. And at times I did feel like he's sort of talking to experts. So he's an expert talking to other experts. And a lot of people come away thinking that they know what's happening, but they're not really able to apply it. Now, one of the reasons why I created a course is because of that, and I sort of fell into it. It wasn't like, yes, I'm going to create the course now, it's going to be amazing. That's not how it happened. I was working in a prop firm, and I was in these interesting positions that used to last 4 hours. And people would be like, oh my God, how did you do that? It's like your commission's like next to nothing. Like, what is going on there? So people wanted to know. So I started making, no, at first I was on Skype. That's how old I am. So we were all on Skype, 12 of us who wanted to learn more about what Dee is looking at. So we were all kind of discussing it, but that turned into a complete prison for me, where I didn't have any time to do anything. I was obsessed with it. They were obsessed with it. So I got to a point where I would be going out to dinner with my husband, and he would be like, can you please put your phone away and just be present for a second? And I would be like, yeah, I'm just going to answer another question. Now, granted, I was a bit younger then, but, I'm not nowhere near as obsessed with phones. However, I felt that I wanted to discuss this amazing thing that I've discovered. It was sort of like, I worked it out. I must tell others. It was that sort of a moment. And I was very, very into forever discussing things. You put me in a room even today with some traders, we're going to sit here for 3 hours and it's not going to be enough time. We're all obsessed. We all have the bug. We're completely infected with this business and playing detective to figure out what's going on. And I don't even care about the money at this point. If I can figure out what's going on, that's more interesting to me. It sort of went from there to me going, I need to do something for my free time. And then I put it up on YouTube, just this little tiny video where I have huge purple hair. I'm very scared of the camera, so you can even see it. If you want to check that out, just go see the link below this video. They've very kindly posted all of my links below. And if you go back to the first ever video of Dee talking about using intraday supply and demand, and it's like, hello, traders. Today we're going to be talking, I was so awkward. I can't even watch it now and just laugh at myself. Because, I was a musician at that point, but I was an instrumentalist and a singer. Now with singing, you don't have to come up with a script. You generally don't talk all that much apart from introducing a song and stuff. But even so, I was an instrumentalist. The talking was usually done by somebody else. Then I was just doing my job. So when it came to talking to camera, I was very awkward, and it took me probably about 3-4 years to actually get comfortable with this side of the business. What I wasn't expecting is to have 30,000 views in the very short space of time. I posted that video 2015, and literally some 30,000 people that decided that was super interesting suddenly saw it. And I thought it was going to be seen by 12 people. And that wallpapered me with questions like, hey, do you have a book? Hey, do you have a course? Hey, where do I learn this? Hey, how do I learn this? And I was like, I don't have anything. I do not have anything. And it wasn't for another 4 or 5 years that I decided, okay, people have been asking me for so long. Let's maybe come up with something that's very structured. I am CPD certified as well, so we went down the road of CPD certification of the courses, which means we have to review it every year. Sometimes we change things, other times we don't change anything. It all depends on the questions of the students. And, obviously I'm involved with TopstepTV for the last 1.5 years. And I'm trying to bring a huge part of that to... obviously, there are certain proprietary things that I'm not just going to give out. But, I'm very generous and I don't hide, any parts of the methodology. If you can reverse engineer it, good luck. If you're looking for, good courses, just I'm not going to necessarily suggest anyone or anything, including myself. I'm not going to suggest it. Just be careful out there, because there's a lot of nonsense, and there's a lot of people who will sell you a course for thousands and thousands of dollars, sometimes very, very cost prohibitive. and you sign up, you pay like 10,000 or something just to learn what is a candlestick and what a moving average is. And you're like, gee, thanks. I could have learned that on Google, man. So a lot of unscrupulous people in this industry. So be very, very careful and make sure that you watch how they trade, you know, whether they can actually replicate what they're doing to any degree, or at the very least explain to you what they're seeing on the chart in real time, you know, rather than just going, yeah, buy my course, man. I'm just going to clear my throat for a second because it is the morning and those frogs have come to play in my throat. So give me a second. All right, we're back. Grant says, is there a difference between trading XFA and live? Not rules, but speed of execution. Trading XFA, no. So no. So XFA is like sim, right? So it shouldn't be that different from a combine. Now live, yes. If you are in with size that is more than the size on the actual dome, you might find that those of us who are mere mortals and we do not have, oh, I just realized I'm actually sitting really lower down because I adjusted myself for the main broadcast, and they always sort of put me somehow in the frame where it cuts off my head when I'm sitting normally. So sorry about that. I was like halfway down into the screen. All right. So yeah, and live is dependent on obviously where you are in the queue, right? Because it's a clearinghouse, and usually those of us, like I said, mere mortals who are just, you know, doing this through various companies and various connections that might have the direct access, but, you know, they don't pay for like super low latency and stuff. You might find that we don't have favorable executions, right? And that costs like millions and millions of dollars to obtain. Like if you want like priority executions, something that hedge funds have, right? Especially if they're running HFT. But but yeah, so if you're trading with 1 micro, you're probably not going to notice any difference. But as soon as you go over the amount of, let's say, nearest number of contracts, 5, 6, 7. Let's say you want to do 10 micros on a live on copper at this time of day. It's probably not going to happen. Not immediately, right? There's going to be a lag, and then they might decide to fill all of it. Depends on how the platforms are tuned. There is this thing called fill or kill, which means you either fill all of it or nothing. Or you will find that maybe some platforms even have partial fills, so they will fill you into whatever is available there. Then the price moves to another price, then it will fill you more. I don't like that because it takes away the control that I have of like position sizes and stuff. Sorry, I just had to crack my neck there. Granny D in full force. Let's see. Rossi says, Deeyana, are you from Azerbaijan? No, I am not. That's a new one. So far, I've had Irish, Australian. What else do people think that where I'm from? German, Dutch. So this is a new one for me. I know that I have a weird accent. So here's the thing. I'm actually from Serbia originally. I did grow up with English, okay? So my family used to live in London. My older sister was born in London. So we sort of had like this connection to England in general. And I decided to move from Belgrade to London in early 2000s. So I've been living here ever since. Now, I'm a musician. And because English is not exactly my mother tongue, even though people find that difficult to believe because of the, I speak English pretty well, right? But then my brain sort of mimics whoever is around me. It's like a really bizarre thing. So if I'm talking to, to Hogue, I will catch myself saying things like demand zone. And I'm like, usually I should say demand zone. Like, what the hell am I doing? Or, if I'm talking to, like yesterday, Jerome was here. So throughout the day, I found myself sort of having a little bit of his accent for some strange reason. And when I went to Scotland for literally like a 10-day break, it was a vacation holiday, as we like to say in the UK. And I came back and I couldn't say, they have this mountain where we were at. It's Cairngorm Mountain, which is how you should say it in English. I kept saying Cairngorm Mountain. And I couldn't stop saying it. And I was like, what is wrong with me? Stop it. So sometimes people think that I'm actually making fun of them when I start doing that. And I actually spoke to somebody who was an American, and we just met socially. Like, it was I think my husband was leaving his former work due, and I'm talking to someone, and as I'm talking to them, I realize they're American, and my stupid brain, I had a couple of drinks as well, so that it gets worse. And I completely molded into an American person, which was like so odd. So he goes, oh, so where are you from? And I'm like, oh, Belgrade, Serbia. And he's like, but, oh, you mean you're not American? And I'm like, no, I'm like nowhere near. So he was like, why do you speak in an American accent? And I'm like, I don't know. I'm so sorry. So it puts me in these like awkward situations where, yeah. Anyways, let's move on. Back to trading. They're trying to get below this HVL, so let's see if they can break it. I am going to try a tiny trade to see whether we can finally go below this HVL. So this has been, point of problem. Now, just in case they whack it back up there, I'm going to put in one lot, right? So just the one lot. I also decided that those red things are making me really stressed out at the top. So I changed colors. And if you want to know how to do that, where is it? Trusted data, I believe. No? Miscellaneous. Here it is. So if you want to change this so that it's not like the jarring reds, it's like, you are red on the day. I think it has an effect. I need to ask Jerome this, actually. Does this have an effect? Oh, Rasi says zdravo. Zdravo, Rasi, kako si? So Jerome, do the colors, this is why we need to make it into like a weekly segment. Do the colors, like the red colors, have a negative effect on our mental state? Like, let's say, we know that red is bad, but, does changing it maybe make it easier? Because I know it made it easier for me. I've never done it before, but, Topstep is a very unique platform that has a lot of customizations done to it. I mean, I wish we could change these as well, so they're not red. Do an Indian accent. No, we're not going to be doing an Indian accent. Dia says, guys, she's Serbian, leave her alone. Dude, you have no idea how many people want to know. Because, look, I get it. It's not like, oh, yeah, you're, whatever. It's the fact that my accent is very, very difficult to pinpoint. I get it. It sort of has an English twang to it, but sometimes it has an American twang to it. And then sometimes it has Serbian twang to it because I'm, my Eastern European side comes out. I can do that accent because that is not offensive. And I have been listening to others talking in English in my country. You happy now? Okay. Is it difficult to transition from day trading to swing trading? I would say it's more difficult to transition from swing trading to day trading because it's a lot more sensitive to things that you're doing. I'm sorry, I'm just laughing at myself here. So swing trading is easier in my eyes because you're kind of looking at levels that have a lot more trading information comprised in it. And generally, the signals you get from it are much more solid. Let's put it that way. Whereas intraday, not only are you sensitive to any inconsistencies in your trading, but you will also find that the levels and the concepts that might work on very large time frames don't quite work the same way in like tiny little time frames, tiny time frames. Good name for a band. But yeah, so for me it was much more difficult to transition to intraday than swing. So swing trading was kind of not that challenging for me. I was like, okay, we've got a systematic way of entering things. We're scoring the zones for quality. You pop in a limit order, you place a stop loss, and then you wait. Jerome says, if you identify to the colors, then yes. Otherwise, no. Red is red, green is green, roses are red, tulips are blue. Thank you for that lovely poetic segue there, Jerome. That's very, very nice. So yeah, I do identify red as red, probably because I've had some psychological traumas in the past. I have spoken about the time when I blew up a 70K account after building it up for 2 years. So that wasn't great. If you were here last week when I was on with Mick, you would have heard the story of me building up the account literally 2 years. Very painstaking, very diligent and careful and stuff. And then I just lost my shit in like 5 days and just blew up an account. And ever since, this is why I know a lot about neuroscience, psychology, how to control it, precisely because of that particular experience. I decided that that's never going to happen again. And if it does happen, it's going to happen slow. So it's going to happen over time if I'm really malfunctioning while I figure it out. But it's certainly almost like a rite of passage, right, for a trader to know how it feels to blow up an account. And in a way, XFAs and combines provide us with that experience for so much less pain. All right, we're about to smash down through the initial balance, so I'm going to add and I'm going to adjust my stop. Now this is more of a breakout trade. Not super keen doing these, but somehow the shorts tend to be more juicy for me than anything else. And now that we made up our mind, so it broke the initial balance, now we're going to see if we can sustain below this initial balance with quite some conviction. Now, conviction means no selling wicks, no nonsense. We still have plenty of space down to a DR low, so this could be a trade that is going to last for quite a bit of time. We have some puts at 519. That could be a potential zone that that might be causing some pain for the downside. But I'm going to put a target at 112 ticks and just see how we develop from here. It doesn't mean that I'm going to keep the target there. If we don't get the price action that I'm looking for, obviously I'm going to kill it. But we've gone under the HVL. So the primary reason for me popping in that first trade that I was front running is because we kept assaulting the HVL. And now we're trying to go below the initial balance. So my next orientation point is that we hold below the initial balance with a decent amount of strength. Doesn't mean a big candle. Doesn't have to mean like a big displacement, as ICT people would say it. But I would say just go below it and not have a significant buying wick. So not smacking it down all the way here and then pulling back. I don't want to see that. In that case, that would be my early exit. Just want to see an orderly selling. That's all I want to see. So give me order. See, we have somebody who's spamming us a little bit. Thank you, Bruno, for dealing with that. Hobbs says, I'm from Yorkshire, Dee. You speak better English than me. I mean, I suppose, yeah, I speak a little bit more posh than some people. Because, a lot of South London people are a little bit like, you're right, mate. But, I kind of don't, I don't personally identify with that kind of an accent because I was brought up in a very proper environment, let's say it. My parents, my dad actually comes from like this old European nobility thing, and he's got this whole thing about, you know, behaving properly and dressing up properly. And well, he's no longer with us, but you know, he was like, if you're gonna come for dinner, don't come looking like you've just rolled out of bed. And or you know, anytime I was traveling somewhere, he would be going, "You're going to an airport, make sure you look presentable," and things like that. I mean, I make him sound horrible, but he was actually a really funny guy. He was a musician who was in one of the frontmen of a very famous Serbian rock folk band, and they were sort of comedians doing sketches in between, and they were like wildly popular. Every time I'm over at my mom's place, Eddie always pulls up the fact that I still have like his platinum records in the background. And yeah, next time we're there, he's probably going to do the same. I'm going to be hanging with Eddie today. Who was your apprenticeship in Chicago? So it was a company that was called Infinium. I don't think they're around anymore. And it was a bit of an interesting environment. It was a frat boy culture sort of thing. But, you know, I didn't mind that. And they were the ones who said, oh, volume profile, you know, you have to know about that. And then after that, they gave us, I think it was like 20,000 for the overall account, but obviously the risk limits were much lower. The risk limit that they gave us was like 225 per day, and then practically if we blew out of a grand, then that would be it. But if you've survived that, then they were starting to like level you up, just like Topstep does, you know, only for much smaller amount that I paid. So yeah. And then, you know, I sort of bumbled around a few prop firms in London as well. But I kind of prefer the way Chicago does it, because they were the prop hub. And I was looking for a Chicago-based firm. That's how I found Topstep back in, I don't know, 2014, 2015, whenever it was. It was a long time ago, so me and Topstep go back for a decade now. Ricardo says, Deeyana, where do you anchor your volume profile? Do you use range volume profile instead? So I like to use 4 weeks worth, and it's literally anchored to 4 weeks worth. It doesn't change. So on my charts I use obviously my thing where I literally just press a button. So this is just volume. This is volume profile. And that is 4 weeks worth. So I don't change that. It's like fixed 4 weeks worth profile. If I'm going to do a trade based on the 4 weeks worth of volume profile, I would, in that case, I would use a POC, okay, as a potential zone. So it's not like, oh yeah, it's the price that I want to go in. But because the zone builds up so much time and volume over it, that it does become an area of interest, especially if we kind of fall all the way down to like 456, 63. Yeah, I'm absolutely going to look at it as a demand area. But, you know, there's also a case for where that POC is located. But for me personally, 4 weeks worth of volume profile is one piece of the puzzle. But then TPO profile on 30 minutes is another piece of the puzzle. So I prefer TPO profile for intraday because I feel like it's got more detail, depth, resolution to it, and I can read it much better. Yeah, if it goes below 520, it would be nice. It would be nice. Yeah, let's, as Serbians would say, from your lips to God's ears. We have some very interesting sayings. Iz tvojih usta u Božji uši. All right. Is Jim Books good? I'm still beginning on this volume profile concept. Yeah, I mean, he is the original godfather of profile. He didn't come up with it. I think him and Peter Steidelmeier came up with it together, if I'm if I'm not mistaken. It was Peter's idea. Like, he was the one who kind of observed the events and kind of started putting them into different concepts. And then he worked with Dalton to kind of develop it even further. So naturally going to the source of the people who came up with profile is always a good thing. They even do these they call them primers, I don't know. I was on one of them many moons ago. And I found it useful to see how Jim is analyzing things in real time. One thing I've got to be honest about, I was really confused though after all of that, because I didn't exactly, like, I kind of felt like I knew what I'm seeing, but I didn't quite know where the entry points were and where to put the stops and stuff like that. So they don't talk about that. I don't know whether it's a compliance thing or something, but in my methodology, I kind of went one step further where I'm going, okay, this is your entry point. This is where the stop loss goes. This is your target. So, you know, I'm very systematic. And if I don't know where my exit is on either side, I'm very uncomfortable. I'm like, I can't trade like this. So I always need more, need more data, need to know exactly. And, you know, I've done some research because we run mechanical trading systems as well. Certain things that we've noticed about points of stop loss placements and stuff that work better than others. And there's like a commonality. So that's a piece of proprietary thing that I'm not going to be just giving out like that, because it was very difficult. And it was something that I noticed when I was analyzing thousands and thousands of logs of trades done. And you know how I have this memory thing where I can match stuff very quickly that most people don't have. I just kept noticing certain numbers coming up over and over. And I was like, I wonder if there's something to this. And there was. So that's kind of how I base my stops now. But I, you know, reserve that for the finer points of these these approach. Do I anchor it to the beginning of the session or overnight also? So for the main volume profile, I anchor all of that to 4 weeks of Globex, right? But TPO, I am session by session. I actually did statistical analysis on using smushed up profiles across both, all 3 sessions, not just both, but there's 3 of them, right? It's useless. Like, I don't know what, like, maybe apart from looking for excess or single prints, the stats just didn't work. Like, if you're outside of the value area, the value area doesn't act as resistance or support, or like if you're outside of it and you come up to the outer edge of it, it doesn't bounce. It's like, you know, 3 sessions, it's just nothing. But when you take the RTH, like for example, take the COMEX session, take the Asia session, take the London session, without polluting it with COMEX, because there's an overlap. So I can tell you this: when I'm calculating my London values, I cut them off. I cut off the calculation at COMEX start for copper, for example. If I'm trading something that trades for NYSE like DAX. So I will cut it off for the New York session start. I'm not going to pollute the data, because I found that the value area edges that are mixing and matching those are not nearly as accurate. So therefore, this way, we have an unpolluted area of interest up here. That is the short and London session. So when you see London value high, value low, that's a short in London. So that's from 8 a.m. my time up to usually 1:30. We're now in this like weird out of sync moment, which is why I'm running these so early and why some of my setups are not really happening when I want them to. But, you know, usually I run these sessions 90 minutes into London so that by the end of it, I can get my proper setup when I have the highest edge. And that's after 11, well, 10:30. But, you know, usually most of my setups start really moving after 11 a.m. So I'm not a huge fan of trading this that early. I do trade DAX sometimes for, like, let's say if I get a failed auction or something pretty early on, like in C or D period, that would also fall under the London session that I'm running normally. So starting it at 9:30 a.m. my time, which is UK time, and then up to 11. And the reason why I did that is because that's when I trade DAX. So we started these whole sessions because we really thought we were going to have DAX by now, but we don't. And then here we are. So trading copper, it is what it is. You just make it work. When there's a will, there's a way. All right. Did I miss anything? Yeah, so when it comes to overnight sentiment, yeah, I look at where we open at the open in relation to previous day's value. But the overnight sentiment really for me is just like Globex VWAP. Are we under it? Are we over it? Is it flat? Is it sloping? And how far away? I think that's a simpler way of looking at things. And that does work on most things. If you're going to use VWAP as a point of entry, that tends to work better at equities, okay? It's not that it won't work, but it really has to be matched with the day type. Like if you have, more range-bound day, VWAP on gold, copper, crude oil, RBOB, it's just not going to matter much, but it's still good as a sentiment indicator, you know? So, yeah. Cal's says, I used to trade DAX. It's a more orderly contract. Yes, that's what I keep saying. I love DAX. DAX is my baby. This is my bubba. Elpar says, thoughts on when you pull a trade off when it's going against you, like the HVL 0DT coming up now. Well, I have an idea of my, wow, we have some very new people here today, don't we? What is Globex? Globex is when Asia opens. So basically it's the first session that starts trading. And it is the overnight session. So it's basically the open of electronic trading. We call it Globex because it's Globex. But yeah, going back to what was I saying? Just lost my train of thought. Senior moment. See? Having a senior moment. We were talking about DAX. What is it? I don't know. Totally lost my train of thought. Wow. Okay. It is Thursday. I'm yeah. Oh yeah, sorry. When you pull, it just came back to me. Wow. When do I pull a trade off? Yeah. So I would use combination of the level that I'm using as an orientation point and my MFE plus a few ticks. MAE plus a few ticks. What is MAE? Maximum adverse excursion. Very fancy way of saying how much drawdown your trade experiences on average. So for me, my MAE point is about 18 to 20 ticks, which means that when I'm doing these sort of breakout type trades, and I know the types of trades that go into more drawdown than others, this is one of them. So look, for this one, I'm actually willing to give it a little bit more leeway. I'm in a smaller size. My default max size is 3. The Cavalier wants to get out now, so I need to let him out. Otherwise, he's just going to keep making noise. Be back in a sec. This is my primary job, the dog doorman, all day long. So MAE for me is 18 to 22 ticks when actually I like to scale into things, but obviously it depends what's going on. And it also depends on how the price is looking. Right now for me, there's nothing else to do for another 10 minutes, maybe even longer. Why? Because I'm looking for how this candle is going to end. So I'm not going to be, and knowing that copper is directional, so here's where experience comes into the whole equation. Once they pop the initial balance to one side, they typically at some point carry it on. So I'm actually willing to give this a little bit more leeway before I kind of cut bait. But here's the thing. It's down to case by case, obviously. However, if I notice that, let's say I'm doing crude oil and I'm doing a breakout in crude oil and it turns around and it starts to spend time inside the initial balance, I am more likely to cut bait during a long failed auction. So let's say that now we smash down and it's crude oil and I'm doing a long failed auction, so to the opposite side. I know that crude oil, has a short bias. It's like usually shorts. If you take all of my trades that I've done over the last 13 years in crude oil, most of them will actually be shorts. There were some really nice longs as well. In fact, one of my biggest days of $86,000 was on the long side, but it was a very special situation where they actually shut in refinery in Iraq because of some conflict back in like 2015 or something. And I recognized that, and it was just like a trend day. It just kept going. But when it comes to copper, because it's so directional and so not, it's not a double-sided product. So you can't kind of trade it on both sides. In fact, if you try and do that, on most days you'll be absolutely slaughtered. Or the very best, you're going to get your reversal trade that goes absolutely nowhere because they kind of just finish the day there. So you have to know, oops, I just moved that. You have to know what you're trying to achieve with a product rather than just blindly, apply the same rule across the board to everything and anything. You have to just go, okay, I am in a copper trade doing a breakout. It probably will wiggle around, but it's a directional move. They made a decision already. They popped the initial bounce London low, and that is the potential direction for the rest of the day. That is how you should approach copper. If you're trading crude oil, or even gold is very wiggly. And then you can go, all right, so when you are looking for a long in gold, if you see it go long overnight and keeps going, how likely is it that gold is just going to continue going? Not very likely, because gold also has this little thing where it is a very much a Forex linked product. So when some Forex options expire every day at 10 a.m. New York, 9 a.m. Central, you get a reversal and you get a pullback. So loads of people who are doing like breakout trades in and around that time, they're like, whoa, what happened? And I'm like, the NY cut happened. Learn. So yeah, and that's very true for things that are Forex linked. So for example, gold is linked to Australian dollar. Why does it have an effect? Because Australia is one of the biggest exporters of gold. Canadian dollar has a huge effect on gasoline futures and crude oil. Why? Because Canada is one of the biggest exporters of crude oil. There are logics to these things. So yeah, have an intention, like we spoke yesterday. What is your intention with the trade? Experience plays into it a lot. Like there's no real replacement for time. Whoever asked me about books, there's no real replacement for screen time. And journaling, not just screen time, not just aimlessly sitting down and clicking buttons. Do a few trades. Write it down. What do we have today? Were there any releases? What levels did I use? Like all of that analytical stuff that people find boring is what makes people into excellent traders. You're not going to get there by just clicking buttons. And then, at the buzzer, we had somebody saying, oh, but that's not fun. Following a plan is not fun. Oh, and losing money is. Okay, well, when you've lost your kid's college fund on combines and blown up XFAs, and you've seen no payouts in 5 years, is that still fun to you? Because I know it wouldn't be fun for me. But hey, people have a different idea of fun. Is it fun being homeless? Blowing everything up on trading accounts and personal brokerage accounts. Because I've met people who have blown up 5-6 figure accounts of their personal capital. Didn't have prop firms back in the day, and literally ended up living under a bridge at some point because they couldn't afford their mortgage. And and I'm not going to name any names, but I worked as an IT recruiter at one point to learn how to recruit better people for my own company. And I actually spent a year and a half working for a recruitment company. And I even have a small IT recruitment department myself. We're not terribly active now because COVID changed things a lot. But yeah, I have multiple businesses. And we had this one guy who was going for a job at a bank, right? Not going to name names, not going to say which bank, but I was still working in the banking industry because I knew a lot about that, and effectively we had to do the whole due diligence on him. So we had to do the criminal check. We had to make sure he didn't have a police record. We had to make sure that we would go through his bank statements to make sure that he is financially viable, because you can't work for a bank if you have a terrible credit rating, right? So everything has to be in order. And his credit rating on paper was fine. Like, he didn't have any debts or anything. But boy, oh boy, did he like online casino sites, like poker probably or something. He was making about £16,000 a month, but £14,000 of that was going on online casino sites, gambling sites. It's like, is that a lifestyle? Is that a problem? Is that... And you can get yourself into that situation with, too many evals. You go to companies, or you buy all of the maximum amount of things throughout the entire prop firm industry. That's going to cost you a pretty penny, right? And if you're not financially stable, and if you're not very financially well off, that's going to hurt. Like, it's going to hurt at some point. Right, let's see what happens at this HVL. Watching the tape. I mean, I've expanded these candles so much, but I mean, in reality, they're really not that big. They're like 30 ticks or so. Let's see what they want to do here. Some sellers. And don't forget, I've got bookmap on my other screen. This is where I'm going to actually go, just so we can get a little bit more resolution in here. I'm going to go down to 2-minute chart. On a full contract, not on this one, because micros are always late. And let's have a look at what they do. Anything obvious on the dome? We have these 11 contracts. They're too close, though. That's not going to make that much difference. So what I'm looking for, usually if I'm going to do a short, or, whichever side, sometimes you will see a markedly different contract size, kind of sticky outy thing on the dome. Usually they hunt that. So that would give me like a little bit more confidence that the HVL is going to hold. Right now I'm not seeing that. But we are getting a few real-time sort of orders coming in that are on the short side. You can see that on the time and sales. This is the good thing about futures. You can see everybody. We can see you. And they can see you as well. Do you see copper reaching all-time highs against it? Do you know what? I'm an intraday trader. I would trade what I see. Speculating and trying to play fortune teller is not one of my strong points. I don't know. I don't predict. I read what is in front of me, if that makes sense. So, the whole thing, I feel it's going to do this. I feel it's going to do that. That's great, mate. You do all the feels that you want. But I just found that whenever I try to do that, it puts me into... onto a bias, and I don't want that. I want to come with fresh eyes and just read what's happening, kind of like reading a book. When you're reading a novel, you're not like, oh, I wonder what's going to happen now. Let me try and write a novel by myself and see whether I can find an alternative ending to the story. No, you just read and enjoy it, and you kind of just try and go with it, right? Same thing that we want to do with the markets. We are just playing probabilities. We are playing, most people think that you need to predict what's going to happen. No, you need to read what happens at the level and how the other guys with much deeper pockets are actually behaving. Sorry, as this has been asked before, how do you calculate the ASI high and low? In the simplest way possible, you would calculate it by taking the 10 previous days of the average range for the time of day that you're looking at. Sometimes it's going to be the regular trading hours, other times it's Tokyo, sometimes it's the London session. So whatever you're trading, that's the session that you should be calculating. And it only pertains, the average session range, high and low, only pertains to that session. But it is calculated the same way as I calculate my ADR, only using the shortened time frame. Dynamically. So you look at lower lows, higher highs on the day, however the market is going. And when one side of that number gets exhausted, that is your ADR or ASR. Very different than what most indicators will give you. And the only true indicator that does that right now is Blautek DR, which unfortunately right now is only available for MetaTrader 5, but we are attempting to move it to other platforms as well. So yeah. All right, we are kind of at time here. Let Love Win says, I feel guilty taking payouts from some props. There's a moral conflict knowing I'm paid because others failed. Oh, mate. Do you really care about that? Because it's like, you're not taking... Okay, let me spin it this way. If you're trading a live account with Topstep, you are not taking money necessarily from the poor Tom down the road. You're really taking money from the big institutions, right? Because some of the institutions have to be on the other side. So you can almost see yourself as Robin Hood, taking from the rich and giving it to the poor. I mean, I don't really think about that. You know, I've been in competitive worlds my entire life. In order for you to let's say, win a competition, somebody else has to suck, right? Is that fair? So I kind of feel like that you're maybe a bit younger person that has this whole problem of, oh yeah, I can't possibly win if others fail. I'm Generation X. We don't care. It's like, you know, when I was growing up, we were encouraged to compete. And it's like some people would be better at things than others. And, you know, it's nobody's fault. And it's just life. You know, life is unfair. And if you're going to spend your time going, oh, I feel guilty taking payouts and making a great living because some poor bastard over the other side of the world is lost and had a Muppet moment and sized up like a lunatic and played like a degen and therefore now they lost money. Why do you feel guilty of that? Because you did your job? And who do you feel guilty for? Like, the guy that is a degen and has a bad day, so therefore you end up on the right side and they don't. Or maybe the institutional traders, the copper dude that clearly got blown out when this thing happened. That was somebody blowing up. Do we feel bad that an institution blew up? Because I don't give a shit. It's like, whatever, man. But thanks for providing us more liquidity here, you know. I don't know. I'm a bit ruthless that way. I don't, maybe I wouldn't be a trader if I was more sensitive, but this is where my slight sort of on the cusp of being psychopathic comes in, where I have zero sympathy for people who do stupid things in the markets and then feel sorry for themselves. I'm just like, dude, like, really? You sized up, you lost an XFA, or boohoo. Like, I feel for you, on some level, but at the same time, it was your fault. Like, it was nobody else's fault. You can't go, oh, it was Trump, Trump. It's like, just get a grip, man. Like, really? Gonna blame Trump for you sizing up? No, it was your fault. Like, if your loss was controlled, you wouldn't be in this situation in the first place, right? So it's like, let's just try and, try and maybe put it in perspective. So don't feel guilty for taking payouts from prop because others have failed. It's like you're taking payouts based on your performance. Where the money is coming from will depend on whether you're in a live account or not. All right, we're getting some more selling here. Let's add another. And now wait and see what the hell they're going to do. Now this trade, again, it might take forever. But this HVL and this little coterminous line of a supply, because this is a newly formed supply, it could be called drop-based drop, I suppose. But we're kind of continuing to stair-step lower. So let's see if they can finally... And this is a bigger... this is a bigger initial balance size. Not big. It's not big. It's still like within the norms. But whenever you have a slightly bigger initial balance size, it's a little bit of an outlier. It takes a little bit more energy to kind of smash through it. However, the volume is very patchy, which is the nature of a stair-step formation that we're seeing here. But it's still, stair-stepping lower. So lower low on the previous 30 minutes. And smashing into a supply, and then some sellers are appearing. So I'm still willing to entertain this and to give it room, especially because of the time of day being a little slower. We should see some more movement to either side once we get to about 11 o'clock, because then we're going to get very close to COMEX, and Americans are going to wake up and they're going to start moving things a little bit more. So, some patience. Doesn't mean that it has to work, but still. All right, let's take another question, and that will be the last one. Tostino says sometimes a big limit gets marketed. Say 40 lot offer sits in the books, then it gets bought up. There isn't a market reaction. What is up with that? It depends on the size of the overall market. So 40 lots in an S&P contract is F all, as we like to say in UK. But 40 lots in something like crude oil, for example, is a lot. So you would see more of a reaction there. So it's very contextual. Very contextual. The thicker the market, the more contracts you have on the dome, the more effect it will have. Now, if we're talking micros, if you see like 40 lot offer sitting there and nothing happens, micros are not going to make much effect. They are usually derivatives of the main contract. And it's like such a small amount that nobody cares. But if it's a mini, take a look at what the overall thing it is in the whole dome. So if you're seeing, for example, 40 lots in copper, they're going to hunt that, and they're for sure going to have a bit of a reaction. But nearly always when they smash through, like let's say they buy up a ton of money, you still need others to plow in after them. So here's what people don't understand. There's a velocity and time, not just size. So if there is size, but it's not followed by velocity and sort of like a snowball effect where others are going to be looking at that and continuing to go in. I just realized that my stop loss is actually at a wrong spot. And because of that, I'm going to widen it because I placed it like literally right at VWAP. That's like asking for it. I'm also going to cut one. Oops, no, I just bought one. Sorry, I sold one. Whoops, that was a mistake. Talking and doing too many things at the same time. Great. All right, so just adjusting the position here because that was terrible. Yeah, let's leave it here. 28. It's putting stop losses on Globex VWAP. Don't do it because you're literally asking for it. I want to give this more time. And yeah, I obviously pressed the wrong button there. Doing too many things at once, again, comes back to the focus. But yeah, so if the 40 lot offer that you're seeing is not followed by more people doing the same thing, its effect is going to fizzle out. So there's a velocity and a snowball herd mentality that follows. So if that doesn't follow, that 40 lots is just going to be like, woof, we've traded out, and now what? So if nobody else is looking at more than 40 and, somebody else is going, oh, let's get 10, let's get another 40, let's get another 50. So there's a velocity, time, and size that goes into moving the market. It's not just one single thing. So that's maybe something that is a misconception in this environment. All right, we're going to end it on that note. I'm going to be on for Lunchbox Trading later on with Eddie. But Mick is going to be popping in from the risk team as well, so it'll be good to see them again. And always looking forward to hanging with Eddie. He is a very funny guy. Eddie used to be a stand-up comedian, which is where all of his humor comes from. But let's throw you some links before I bounce. Okay, Discord, Topstep, looking for trading buddies, looking for more classes. Every day we are running classes in Discord. We have Coach Hoop, we have Coach Ray, we have Coach Paul. We have a whole bunch of people still doing everyday classes in Discord, so check it out. If you want to come and hang with us and meet us in person, to meet our cyber acquaintance, check out the casting call. Doesn't matter where you are in your journey. If you're still in the combine, if you're still, jabbing away, or you're on the big board, we want to hear from you. And when you're coming on, look alive. That's the only thing I'm going to say. Thank you for being with me. I'm not Isabel. I'm not trading platinum. It's in rollover, so price action gets really weird and non-committal. Same goes for gold. Anyways, let's have a good weekend. Like I said, I will see you later on, but that will be it for me from this week, at least for the YouTube channel. I will see you again on Monday for the last day of the month. That should be pretty fun. Thank you for hanging. I'm Dee. This has been the London session on TopstepTV. Take care.